What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and this is the Watchlist Wednesday for Wednesday, September 8th, 2021. Watchlist Wednesday is when you and I look at a theme or a sector for very specific opportunities that I think have lots of profit potential in them. So today we're going to talk about work from home stocks, and let's just pull up some charts really quick and we'll get to Docusign in a second. Work from home means two different things really, and I'll show you the two themes within this that a couple of them are dropping significantly and could be coming into key levels where it makes sense to buy. Others are very extended, but you should keep an eye out on them for pullbacks or continuation patterns. So when we think of work from home, you know, it was a rough couple years, right? Because we're coming up on 2 years now. It's pretty awful. So when you work from home, you can't go to the gym, so you go get a Peloton. When you work from home, you can't have meetings, so you get on Zoom. So the work from home sector is all of these companies that seized on a specific opportunity during that phase of consumerism and how businesses operate. Okay, so a lot of them aren't doing well right now. There's a handful that just kind of look tragic. A lot of them are seeing bad earnings and things like that. So the first one on the list is Zoom, and that's going to be a ZM, not an AM. Zoom peaked out back at $560 a share, and since then, you know, that's all the way down to $293. Am I getting that right? What is that? That's like a 40% drop off those highs. That's pretty significant, right? It just had a really nasty earnings event. It's not getting up off the mat, which means that there are willing sellers at these prices consistently, and we have this key level of support right around from May of this year, and we haven't seen that tested since then. So that's a very, very important level and could possibly be worth looking for a bounce on that one. But still, overall, it's a very broken stock right now, and there isn't much evidence that momentum traders or buyers are really looking to step up into that. Another one is Peloton. Peloton traded up to about $165 a share. It's down to $110, so that's a 50-point drop. You know, that's pretty significant. It had an earnings event this quarter where it was aggressively faded. We saw a nasty gap down. We're just seeing a ton of follow through. Just like Zoom, it really can't get up off the mat. There's just so many willing sellers coming into this. Now, Peloton has this key level of support right around $93, and then it had that pretty strong breakdown back in May. So it's an either here or there sort of thing. If we don't find aggressive buyers showing up into that 93, we'll probably auction down to the next key support level right there. Okay, two key pivot levels that you can watch into that. Then you've got Teladoc, and Teladoc is a stock, the company where, what do they do exactly? It's telemedicine, basically. You call your doctor, you get a nurse on the video, and then they can prescribe things over. Went parabolic, about $300 a share. It's currently trading $150, so it got cut in half. Can't get up off the mat again, right? The same kind of thing. Now, these kinds of stocks have had a more of a consumer bent, right? Businesses are not really buying Peloton. Individuals are. Teladoc, you know, you can make the case that there's some enterprise customers and things like that, but overall it's more of a personal thing. And then Zoom absolutely does have enterprise stuff, but they are being eaten alive, I think, by some other companies out there. So the next theme, instead of looking at personal expenditures, you can pivot into software and things that it's not that people want to buy them, they have to buy them. These companies have to invest in these companies because they're doing exceptionally well with the solutions that they have, so people don't have to go into buildings, right? That's the basic idea. So as an example, we've got, you could even say Microsoft. Microsoft's not even on my list, but this makes absolute sense. They're a software as a service stock now. You know, you rent their software for $10 a month or whatever, and that's just on a monster run. right? And those are things that companies have to buy for their employees just to get the job done, right? Another one, we've got team, all right? Straight up, right? Straight up after that earnings. Nice flag, nice continuation. Currently trading at $380 a share. I think it's a little hot right now, but look for a first pullback. I think there's a good opportunity there. Then you've got Adobe. Adobe's got earnings coming up in a week or two, so there's that risk there. But again, after that basin break from $540 a share, run up to $663, great run and solid move. And it's just not looking back right now. Why? Because companies have to buy their products in order for their employees to work. Then you've got, did I say team already? Yeah, team straight up from there. And then you've got Docusign. And I think Docusign is coming into a very interesting level that you can work from here. It had stellar earnings and a great earnings reaction back in July. We saw an auction all the way up to about $300 a share. It's been basing out. It hasn't really traded well over the past 2 days, but a lot of tech stocks haven't. And I think there's a key opportunity here as it comes into prior resistance, anchored VWAPs, and a volume shelf that you should definitely keep an eye out for. So those are the setups I'm watching for this Watchlist Wednesday. I will see you again next week where we're going to cover another theme or another sector. If you want to see more about how I trade and the approach I take, you can click the link below this video. It's going to take you to a training webinar where I talk about the roadmap that I use for finding very successful stock and option trades. So thanks for watching. See you next week. Have a great day.